Chatter. Okay, good. Well, I was going to go around and do introductions, but everybody knows who everybody is here. We can just go down to 10 seconds each. Just tell us about you, your fund, and then also area of focus, and then we'll dive in with some questions, which will be character building to start.
So I run Lakson Investments, which manages about $400 million across venture, private equities, and fixed income. And we have a venture fund which has done fairly well.
Faisal Aftab, co-founder and GP of Zayn Capital, Pakistan-focused early-stage fund, investing technology sector agnostic.
Ali Mukhtar, co-founder of Fatima-Gobi Ventures. Fatima-Gobi Ventures is a JV between Gobi Partners and Fatima Group, early-stage investing into Pakistan.
Misbah Naqvi, I am a co-founder and GP at I2I Ventures. We are also an early-stage fund. We do pre-seed and seed investments. We are sector agnostic, but we like founders that are solving big problems and addressing big opportunities in Pakistan.
Rabeel, Warraich, I founded Sarmayacar, also an early-stage focused fund, also investing in Pakistan.
Surprise!
Aatif, Awan, Indus Valley Capital. We are also an early-stage fund focused in Pakistan, but optionally also invest in Pakistani founders anywhere. We have about $40 million in assets and are currently investing from our fund too.
Great. Okay, so I want to make sure that each of the sessions are, leave with people to take actions and actually think about from a prescriptive standpoint versus kind of high level, like work harder, like no one wants to benefit from that. So I guess because we have a number of founders who will both view this afterwards and others who are thinking about fundraising, just want to just go around and I will ask not all of you, but sometimes we'll just put it at random. If you think about some of the best pitches you've typically seen, think about what has stood out in each of those as you've basically made those investments and how founders should basically think about the fundraise. So, Misbah, do you want to go first?
Sure. I think for us, what stands out obviously is a couple of minutes and some focus on why the founder is doing what they're doing. I think you spoke about purpose earlier, but most of us see so many pitches on a day. We're able to smell it if it's not real. So sometimes if their stories are concocted about I was walking along and this happened to me, and it's like you can tell through it. So I think a genuine coming together of why the founder is solving a certain problem is something that I think is important to touch on. I think the other opportunity, the other part is the opportunity in Pakistan and why they're building that, which again, to most of us, especially if we're looking at a sector that's already either we've invested in, is something that's already known. So I think the good founders touch upon that, but don't spend too much time trying to get into it. And I think the last thing I would say is I would love to understand what is it about you that sets you apart from others that may have done this before or that may be doing it in other regions already. Some comparables are always helpful for us to see, okay, this is a model like whatever. Sometimes the X of Pakistan actually does make sense, right, because we want to understand the competitive landscape. So I think those three things and not necessarily focus on maybe made up stories would be helpful.
Okay, so Aatif, probably a founder probably telling you what LinkedIn should be doing is probably not the right way to basically pitch you considering your background. So what's worked for you?
So actually we love when founders show us that we are wrong, because one of the things as being a generalist VC is we know a little bit about a lot of things, but really don't know much about anything.
Speak for yourself.
And what happens is you have a thesis, and then founder is like, no, here is why. Actually, this is somewhat different, right? So we love that when they do it. And I think of it as a founder market fit. And that's very important because startups are hard. I think most of people realize it. And especially when you get into year 3 and year 4, there's real founder fatigue. And some markets are way, way hard, especially in emerging markets. If you're a trucking marketplace, if you're, agri-tech startups linking, farm to markets. And then finding those founders who really either because, they had a link, they got someone involved with that industry, or they are so passionate about it and, wouldn't mind all the challenges working day in and day out of that. We love that. So, and one of the examples, from our portfolio would be Bridgelinks. That founder team is just crazy about trucking, the kind of things they're dealing with. And I think Truckitin is very similar in that regard. That's not a business just anybody can go and build. Some consumer software stuff, probably a lot of people can do it. But in very hard spaces, that founder market fit is that really jumps at you, and you're like, oh, I want to be a part of that. I want to write a check.
So, in terms of pitches, so I'll give an example of a company which we invested in, which is very early, and why we liked it and what it does. So, the company's name is BookMe. Founder's name is Faisal Aslam. When he came to us, he's like, look. If you go to buy a ticket in Pakistan, get a bus ticket, right? And you want to go from Karachi to Gujranwala. You can't go direct, you have to go change buses twice. So you go to this bus depot where you have lots of different counters for different buses, and then you go into buy your ticket. So you go to the first one, you're like, okay, I'm going to go from here to here, and then next bus. And then you go to the first one again, and you're like, is that ticket still available? And then you buy that, and so on and so forth. No digitization, nothing. So Faizan went, spoke to all the bus companies, digitized all of them, and now on an app, you can book the entire route, choose your seat all the way across. A pitch like that, which is solving an existing problem in a very elegant way, that's the kind of stuff we'd really like.
And was that a large part of how it was pitched, like at the first meeting? It was just very articulate and walked you through the problem?
Absolutely. Yeah, it was the first one. Faisal and I worked together on the deal. And
so you can't use the same one. What's your answer?
I think I said it for him as well.
This is how you do co-investing. Right?
This is the quintessential co-investing.
All right,
we did, by the way. For my own fund, I followed on in BookMe.
Okay, nobody likes to show off, but keep going. No, just go.
So,
I'm joking.
agree with what everyone is saying. I'll add something different, like in terms of what I, particularly when I see founders, what I look for. Obviously, the pitch deck and everything, it's great. Everybody's following a format. But I think what's key is I'm more of a visualization person. So has the founder really visualized what the company will look like?
Oh, you can't hear? Okay.
Is that better?
Yep.
Okay. Yeah, so something that, effectively what I look for is, have they visualized what this company will look like in 3 years, 5 years, even 10 years out, right? And then trying to work backward and try to dissect the visual in their head, and then quantifying that on a spreadsheet and seeing if it correlates. Basically what I'm looking for is, this is a long-term game, and they're going to go through trials and tribulations. So do they really know the numbers and the motion on their fingertips? So, typically the founders we backed, that effectively know this stuff from day one, whether it's going to play out or not, or at least they have a vision. It tends to work really well in an unpredictable market like Pakistan. So that's something unique in the.
Question for you: what are the mistakes that people have basically made in pitches that you would ask them to avoid if there's and Rabeel, you after basically.
So in terms of mistakes, we I think often see a lot of founders talking about the model too much.
You can't hear? Okay.
Just speak
Maybe
louder.
I'll AV support.
Yeah, especially early days, talking about the model 3 years out, 4 years out, there's a lot of uncertainty. And then in that model, a lot of it is building a model and then tying it back to reality. How do you execute on that versus putting a 5% CAGR and 10% CAGR and not visualizing how many people you need, and so we see that consistently across pitches that we see, and it's if you think through that, it's a problem that can be solved very easily. Yeah. Thank you.
So I'll mention what we like to see, and I think pitches that are missing, I think go to explain what is missing in those things. What we like to see is clear demonstration of why a particular startup is set out to execute against an opportunity. That could be a demonstration of why the team is uniquely positioned, why they gel together, why their experience is relevant. It could also be a very clear understanding of what the problem is, because that's where it starts. And if you can capture that in a pitch, again, we also go through hundreds of pitches every month, it just catches your attention. The second thing, which is often missing, is really also a demonstration of where you can get to against the ask that you have. What oftentimes is painted is large market, this is obtainable, etc. Again, it's interesting only to the extent that we are looking for large markets because we like large outcomes. But do you have an understanding of the ask that you have? Where does it take you? What do you need to get there? If you can articulate those two things, we really like that pitch because it at least gets a second conversation. So the ones that are missing, unfortunately, often lose you on those points.
I guess maybe a bit of group therapy, I guess, more than anything else. Talk about kind of the outlook based on the year past. I mean, I talked about it earlier, which is a lot of us have kind of seen, yes, a bull market, growth expectations, etc. But, kind of reality has set in. I remain optimistic. I'm actively looking at both companies and, both at funds, outside of the US, definitively, of course, in Pakistan, as well as the Middle East and others. So kind of give a few words on kind of how you think about, outlook, number one. Lessons you've learned, I guess, is also kind of important. Feel free to share or not share. But Ali, do you want to go first, and then Misbah next?
So I think it's very important to look at where we started from and the distance that's been covered. So, in 2015, when we started, and Rabeel and, some of us here, Pakistan had less than 25 million internet users. There was $0 of venture. You couldn't set up employee stock options. You couldn't set up holding companies. Fast forward that to 2022, you have $360 million of venture. You have multiple funds, foreign participation, company structuring. So we've covered a long distance, and on the internet penetration side, over 110 million internet users. So definitely the last 3 years, where there was a lot of liquidity in the market that really enabled Pakistan to, break out and be on the map. But having said that, now would be a period where you need to build a sustainable ecosystem. And to me, the biggest link, so 70% of funding in Pakistan was coming from foreign funding, which for various reasons, emerging market risk, attractive valuations in the US, for a long time may not be as easy. So building a local sustainable ecosystem will be a very important need of the hour. So that's how I see it. Thank you.
Misbah?
Yeah, I think I'm audible.
Oh,
right?
awesome.
I think so. Building on what Ali said, so that was a zoom out in terms of the ecosystem. I think in terms of having already made 13 investments over the last few years, I think it's the founders right now that we're focusing on and how they're building. And I think that there are some business models which have much more cash burn than others. And there are some founders that have come from an experience where they had access to a lot of cash to burn. I think that's changing, but the good founders are still going to be able to navigate how to tweak that business model in the markets that we're looking into now. So I think for us, this year is about really consolidation. It's about like building, putting your head down, and really looking at how you extend not just the runway, but how do you focus on the path to profitability, which was a nice to use term, but it wasn't really being focused on. I think at the fund level, it's also to Ali's point about international investors coming into Pakistan and being opportunistic. I think that's definitely going to slow down. But I think that counterbalance of local capital coming in and Ali coming from the family office side, local business families and people in Pakistan, they really understand the setup and how things work in the country is actually going to be a good thing. Yeah. Capital that understands how to build in Pakistan will be coming, and therefore valuations will actually be, I think, will average out a little bit. I think there will be more opportunities for local funds to lead. I think there will be more opportunities for local investors to really call the shots on valuations, which to a certain extent was out of our hands when we had big investors coming in from outside and being opportunistic. So I think on the founder and the fund level, those are two things.
Speaking of local funds.
Sorry, I just wanted to add something to that. Look, when we're talking about the outlook, a lot of my panelists over here are raising funds. Collectively, we'll have the other panelists and myself. We'll have collectively 3 to 4x the kind of capital we had just a few years ago. Mm-hmm. So Pakistani funds will be able to make sizable investments. I think the macro stuff, which everyone's following, will clear up as we go forward in one way or another, and it'll become positive shortly thereafter. I think once that happens and larger checks are written from Pakistani VCs, international money will come along at 3 to 4x of that size. So I think it's not dried up. I think it will come on and it'll be spurred by the money which is being raised here. I also want to go a little bit into what some of the other panelists spoke about, which is the kind of companies that got funded. Look, I think founders also built businesses which were getting funding around us, right? So you look at India, look at the Middle East, look at the Far East, what kind of companies are being formed, and where's the capital internationally going? Because that's where it will flow. So companies which were in vogue were the ones set up by Pakistani founders, and that's where a lot of the money has gone. As Ali said, we just started our revolution of digitization. So this was our first wave. Most countries have had a first wave before and actually set up businesses which have proven to make money. A lot of the businesses funded now have not necessarily been proven to make money anywhere on the planet. So I think we need to, going forward, start looking at business models which have a path, as she said, to profitability.
Thanks. Yeah, so agreed with everyone on the panel. I think I'm slightly more bearish, at least for the next 18 months or so. And just because it's, if you look at the last 12 years, the cost of capital was excessively low, and it was unrealistically low worldwide. And that made a country like Pakistan investable for foreign funds because the risk-on environment was just, anybody was able to raise money. I think the Fed, US Fed, because I think that whatever they do impacts everyone. It's pretty evident now globally, especially for frontier markets. I don't think they have the capacity to cut rates to near zero in the next, whenever they cut later this year, next year. I think the base cost of capital will be 6x higher than it's been in the last 12 years. So possibly 150 basis points to 250 basis points. So what that changes ahead is the type of businesses that'll get funded. So let's say if I was doing a proof of concept and I had the luxury of doing 6 safes to get there, I think you have 1 or 2 safes before you have to start to show product market fit and some signs of revenue and then even a path to profitability. So that'll be something significantly different. So some of the models may not actually have legs, especially the ones that came about in 2016, 17, in the previous cycle. And from a Pakistan's ecosystem point of view, I'm bullish long term. It makes sense. Currency devalues a risk, especially for all of us, where everybody's investing in dollars effectively. But really, it's going to be 10% averaged out. Historically, over the last 30 years, was 5% devaluation. These few years are just more aggressive because the rate hikes were aggressive. Next year, as we cut, things are going to be better, and Pakistan will start to get space. And I think then, probably 2025, things do look a lot more optimistic. And lastly, what I'll say for founders, I think, look, we still believe that some of the best founders left companies that knew how to, they had scaling experience in, like Kareem, Daraz, Foodpanda, and created companies. And really, these guys going forward, especially in this period, if they learn how to build a real business, improve their tech, and survive, they'll actually turn into real businessmen, not just startup founders. And then we'll understand the cyclical nature of how you scale a company, which in Pakistan is a 3 to 4 year cycle. Every 3 to 4 years, you're going to see a crisis. But if you survive, you can. It's an opportunity is massive for you, everyone here in this room. So bullish.
Yeah, I just want to take a step back and build on what Babar and Ali said earlier. What was the original venture thesis in Pakistan? Right, like young population, large population, great demographic dividend. But it was really a shift in our consumption patterns, moving to digital-first avenues. Where are we on that? We are at 1% e-commerce penetration versus high single digits in India and over 25% in most of the West. We are in our venture kind of like heyday of 2021 in Pakistan. We invested about $1.2 per capita of VC compared to India's 30 and close to 40 for Indonesia and Egypt. So that digitization wave, that thesis is very much still intact. Yes, we have this kind of funding slump, which is not unusual. It happens. And I think what it will do is it will teach certain lessons. So if anyone's building a business for 2023, tough luck, probably is going to be very difficult. But if you took a call 20 years ago in India or 30 years ago in China, are you going to have more digitization? Are you going to have more businesses that create value by leveraging technology and having scalable models? I want to meet a person who can take a different bet on Pakistan.
Yeah.
And I think that's really what we have to write out. And in the middle, we're going to find models that are fundable, that make returns. Hopefully, we recycle that. Every successful business that goes on and has an exit creates the Kareem Mafia. It creates 100 new entrepreneurs. And it's just really the long-term play. It's just only when we're thinking short-term do we really have to worry about what is the short-term volatility in this market.
Aatif?
So I believe every crisis is an opportunity, and from our perspective, we think of it in two ways. Existing portfolio companies that farther ahead, very difficult market, 2023, maybe half of 2024. But if you're starting a company today, or if you're writing that first early stage seed check, actually this is the perfect time to be doing that, because by the time you will need follow-on funding, the markets are going to be better. So we did 6 investments in 2022 from our fund 2, which is higher than what we did in 2021 or 2020. So we are, pretty optimistic about Pakistani startup ecosystem continuing right. I want to cover macro. I think that's where there is a lot of pessimism and noise gets created, and it's because people haven't dug deeper into the numbers.
Yeah. So just to interrupt you did a very good job. I mean, of not just objection handling, but kind of framing that from a larger global context. So it would be good for a lot of founders to be able to have that conversation as well.
Yeah, so there are 3 things that come up. One is inflation, then there is the currency depreciation, and then there is your political stability.
That's enough about Argentina. What about Pakistan?
Exactly. So Yousuf, I loved what he said earlier, right? It's happening everywhere, but I think you can make a stronger point. What's happening in Pakistan is way better, and I'll prove it in a minute. So let's look at Egypt, because a lot of our friends here in GCC have been active investors in Egypt, even though in Pakistan they're still kind of tipping their toes. Inflation, if you look at last 10 years, 7 of those 10 years, double-digit inflation in Egypt. Pakistan, only 2 years had double-digit inflation. Currency depreciation, last 10 years, Egyptian pound depreciated twice as much as Pakistani rupee did. Not 20% more, twice as much. Still, the economy moves, startup ecosystem moves. Political stability. Pakistan is going for their 4th democratic election. Yes, we have military interference. Yes, it's emerging democracy.
That's enough about Myanmar, but keep going.
Yeah, and Egypt, you had last 2 presidential election. The President Al-Sisi won with 97% of the vote. So you can guess what kind of election that was, and now he's a lifetime president. So this is not putting down Egypt. Despite all of that, that's a good opportunity. And my point is Pakistan is a much better opportunity, even looking at all these factors. And you just have to come and do it. And startups are not just a function of GDP, but Pakistan's GDP, going back to 1990, look at any 10-year period. The minimum CAGR it's grown at in any 10-year period is 5%. And it grows typically at 7.5%. So actually, it's very stable in the long run. So in startups, you're taking a long-term bet. You're betting on the digitization. It depends more on how much of the economy comes online, like Rabeel was talking about and other panelists were talking about. And from that perspective, it's actually an amazing, amazing bet to make. And I think all of us are making that bet, and we'll encourage the investors in the room to spend more time on that. And it's just an amazing opportunity in my view.
Okay, I think everyone can learn from that, and I think it's important for us to be enabled about that, because, like I said, there are positives. And as I think I've mentioned in the past, is companies and ecosystems are built over time, right? It's one thing to be able to say, okay, well, there's been a complete drop, but if you focus on the trend lines more than the headlines, then you'll definitively see that there is a much longer curve that we need to basically go, and that's going to go upwards. And I think it's important for us to be able to think about that. Then we'll ask a last set of questions, and then we'll open it up to the audience. So starting with yourself, is there, you can have a choice of which question you want to answer. Is there a sector that's been most surprising to you from an investment standpoint? Or what is the most valuable lesson you've learned having been a VC?
Valuable lesson. I think, look, I mean, we've, and I don't mean to pat myself on the back here. We have invested, we've invested in companies with very, very, very strong cash flows. And that makes up our portfolio. There's a list over there, companies we've invested in. Our lesson is stick to that. We like these kind of businesses. We don't understand some of the complex businesses with AI, et cetera, et cetera. Our lesson is to stick to companies with strong cash flows where we can see profits.
So a sector that I'm excited about, I think that was your other option, right? I mean, honestly, the entire technology sector is exciting in Pakistan, right? No, I'm gonna go into detail there. So B2C is not really liked. E-commerce is not really liked. We've done actually a lot of B2C e-commerce in Pakistan because we still think, as everyone is saying, there's less than 1% penetration in Pakistan of e-commerce and digitization overall. And ultimately, if digital payments are going to kick in, you do need the consumers to have touch points and historical data. So fintech is exciting, B2B is exciting, but I'm actually still excited about B2C. And I think the opportunity is massive.
For us, the largest part of our portfolio is fintech. And there's very exciting developments that have all come between 2018 to 2022.
Can you talk a bit about those?
Yeah.
That's kind of made you, what's made you excited about that?
Yeah. So for example, in terms of, sorry.
Just like what have been some of the changes that have helped in order to build that?
Yeah, just getting into that. So State Bank, for example, launched similar to UPI Rust, which is a P2P and SME sort of payments rail subsidizing payments. So payments are literally free. So the kind of businesses that will be built on top of that, very exciting. The EMI regulations that allow you to create mobile wallets, and then more recently the digital banking regulations that are actually available in very few countries. So Pakistan is definitely at the forefront of that. And all these policies that have come in the last 3 years, and now they're working on an open banking policy, will really set the infrastructure to build the future of fintech in Pakistan. So we are very closely watching that, and we'll continue to focus on that.
Fantastic. Misbah?
Yeah, I think I'll echo what Ali said in terms of fintech. That's really a big opportunity. And also because fintech as a sector has so many different verticals. And we are seeing that path towards that growing. I think one thing that I would love to see more on is innovative models in healthcare and health tech. Because again, huge opportunity in Pakistan, but challenges are around business models and how do you actually build venture plays out of that. To your other question, which I will answer both parts.
Yeah, totally.
In terms of what biggest learning is, I think, so as a fund, and similar to what Aatif was saying earlier, we're generalists, but we're also very curious. So we like looking at things and understanding them, and also understand that we may never know more about the sector than the founders actually should know. But at the same time, so that for us, we are not the investors we were when we started out 3 years ago. So I think it's important for us to continue to learn, adapt. It's okay to have a strong investment thesis, and you should, but I think you should also be open to understanding how the sands are shifting around you, what is happening in the overall landscape, and so be open. So I think for us, being open and curious is something that's very important to us, and continuously learning.
Rabeel?
So as a broad stroke, I think every subsector is underpenetrated, right? Like with the technology overlay. But when we think of a framework as to how to think about what industries are industry, of course, large potential outcomes is what everyone's going for. We think of like the capital intensity of a business mapped against what the ultimate margin potential of that space is. And I think then within that, how different people are trying to tackle different models. And that also brings us to the point around how our portfolio was constructed again is our businesses that probably didn't require that much capital, and we continue to like those businesses. But not every space is like that, because in some spaces in Pakistan you do have these working capital requirements. Now the reality is venture equity is very expensive to be funding working capital with. But you don't have an alternative, and you can't get to a space, or you can't get to a certain scale. So that's how we think about spaces. All of the ones that have been mentioned are interesting. Fintech looks very interesting. Health hasn't had much penetration. Education hasn't had much penetration. There are more than 5,000 edtech startups in India.
Wow.
Right?
Yeah.
In Pakistan, again, like, we can maybe name 5, 6, 7, but like none of them have even got to that scale. So
I mean, we
I
still
think
have
there's a
better
lot to be done.
We still have a better cricket team, but anyway, that's besides the point. Go for it. Yeah, sorry. I'll keep saying that's my single objection to everything India, basically. It's good. Keep going.
We see opportunity everywhere. So we're truly sector agnostic. I think it's really, really early days. So, playing the field. In terms of the lessons learned, I think, like theoretically you read about power law and how skewed venture is and how most startups will fail. I feel like both personally, I'm, like learning that, how much that is true, how much of the value creation gets concentrated in a small part of the portfolio, and even within that portfolio, towards the later years is what matters, right? Not the early years. That's how exponential growth works. So that's been really, really, educational. And I think as an ecosystem too, that's something we have to learn about, that failure is the norm. The 50 founders that are sitting here, 25 of those probably will not have an exit. And that's perfectly okay. And
it's okay to be not okay. Like that's that's what I'm saying.
And I would say, like a second-time founder, when they come and pitch to us for the next thing, it actually does not matter whether the first one failed or succeeded. In fact, probably if the first one failed, that's a better bet, all else being equal, because you have a chip on the shoulder, you want to do something. But that's something I don't hear in the ecosystem enough. I think people are way too afraid to fail. And I'll give you some stats. So YC, which says they have like 1 to 2% acceptance rate. So they're doing like everybody's applying, they're picking the top like Stanford does. Then within that, they have created a dynamic where there's investor FOMO. Demo day, there's a line of investors. Your first round is taken care of. Despite all that advantages, what's the failure ratio? 50%. Only 1% of YC companies become unicorns. So that's a norm. So just go ahead, take risk, be cognizant of your opportunity cost of the time, and then the rest doesn't matter. There's nothing embarrassing about it. Just go build stuff. If it doesn't work, go and come and try again. And I think as an ecosystem, we have to embrace that and, just go and, pursue these opportunities very aggressively and be comfortable with failing.
So final question is, what advice would you give to a seed Series A B2B investor in the US who wants to invest in Pakistan? Like, what if you wanted to co-invest with something? What advice would you give? And everyone's on the spotlight here, so.
Go in with a local investor.
Okay.
Yeah. I mean, you know all us. You know all of us. I think it's very simple. We're starting to see.
I think the bigger question is, how do you work with global investors, bring them in place, etc. With me top of the list, hopefully.
Yeah. So look, Pakistani startup ecosystem, it's not that large, especially when it comes to number of VCs. It's these people and then a handful of other people. Kulsum couldn't make it. There are a few other people. But it's very easy to get to know these people. It's very easy, it's in our interest to share these deals, and having a clear alignment on what stage you prefer in, how do we line up to that, and keeping an active dialogue. It's just pretty straightforward. I think sometimes there is a sector focus, a B2B SaaS software. That's something that
early stages, right?
Yeah, we're just starting to scratch the surface on that. We've done e-commerce, fintech. We're starting to see the seeds of that. So we hope you'll do something in Pakistan soon.
Thank you.
So I have a great B2B business idea for you. so there's a company, it's called Meds and More. Okay. Started 2 years ago. I played a real small role in helping it. Of course you did. 2 years, $50 million in revenue. We're looking to close the year at 100 million. 30% gross margins. Raising money right now.
A reminder what we do here: seed, Series A, pre-product market fit.
Not GMV.
Right. Okay, a VC pitching a VC. I've never heard of that before. That's good. Very good to meet you, by the way. I really appreciate it.
Yeah, so I think another great barometer test is peers in the industry. So just to be different. I think talking to other founders also, like talk to us as investors, but also talk to a lot of the people in this room, and they'll tell you, what they think of other companies and how they're doing. There's a lot of information sharing and data sharing. So I think that's also another great way to find out and assess and get deal flow. I've gotten some of my best deal flow from other founders in the ecosystem.
So the advice to foreign investors, to be able to, Pakistan has very unique challenges. Not everything that works in Egypt or works in the US or, even comparable markets would be, similar in Pakistan. So speaking to, industry experts, speaking to, local VCs that have had those experiences. For example, you have a container stuck at the port and the LCs are not opening is a very unique challenge to Pakistan, right? So, and we, find a way. So I think that inroads is essential. Yeah.
I think so. I'll divide the answer to two. If you're an angel investor, back to you. If you're an angel investor, I think unless you have a very specific sector focus and you know that sector really well, then it makes sense for you to go solo into a company and really, but work with them and be a mentor and be an advisor and help them because you bring that expertise to it. If not, I would say, people are doing syndicates, which I think is a great idea, but also look at investing in funds. If you can pool together and invest in funds, that would be a great way for you to learn about what's happening on the ground without necessarily, and it's diversification. For a VC looking in, I think to your point, I think invest with local investors. Those of us on the ground understand the ground realities. We call Pakistan a high friction market for a reason. We know how tough it is to get certain things done. And honestly, in 2021 as well, there were some valuations which were decided upon independently by international investors. And those of us on the ground were like, this is ridiculous. Like, this is not something that you can cut and paste from a different country. So I think getting an experience through partnerships, whether it's co-investment or investing in a fund at an early stage would be great. It allows you to diversify, but also understand the market better until you start building your own investment thesis by talking to founders and others in the market as well.
That's great.
First advice is actually visit the country. Yeah. Keep coming. What you see on the ground, when you meet the people, the dynamism, the work that's taking place, you can't get the same picture remotely.
See you in March.
Yeah.
Okay, good.
Yeah.
Second thing is try to understand what localization requirements are there for different industries. And that ties in with the capacity of the population to pay. It's not 220 million people, like most of them are younger than like 21 years of age. They don't even have like disposable income to really spend. What kind of like I said earlier, capital intensity is required to build certain products or solutions in certain industries. Can people really pay for that? So I think all of that learning, doing it on a remote basis or reading reports is not good enough, frankly. And I think that's what has been missing. I think there was a lot of attention because Pakistan on a global map seemed like underpenetrated. It still is. But you can't do it on a fly-in model even. Yeah. You need to really set up an understanding.
You can't phone it in, basically.
Exactly.
It has to be there. Yeah, absolutely.
Can I just add to that? I think also in COVID, it kind of leveled the playing field for Pakistani startups because everybody was doing calls on Zoom, right? Mm-hmm. But that time is over. Yep. And so to your point, yeah, definitely come and visit and see in person because you're not in lockdown anymore.
But Zoom is still great.
Zoom is great.
Yeah, okay, let's just double check.
It's the best.
Yeah, thanks, man. That's appreciated. Okay, questions from the audience. One or two? Yes, go ahead. You can talk. You can stand up and ask it, and I'll repeat it. I promise. I was just kidding. Sorry, apologies. Okay, so that was exceptionally rude of me. I apologize.
Thank you so much.
Nicely done, Rabeel. Good recovery. Okay, he's doing your term sheet. Keep going.
Thank you so much.
Okay, that's fine.
No, he can be a potential, partner.
Done.
In the
there you go.
I'm working with the family office here in the UAE.
Okay.
With one of the royal family as an investment director. So my questions, because all good names are here. So being an investor, what I have seen in the past couple of years, the VCs are truly lacking on the governance side, where they are sitting on the boards, but the governance of the companies are not that effective. And we have seen that how the companies got collapsed, like in the shape of FTX or I forgot the name one.
Sure.
That in Pakistan as well. So how these question is to all, how you are taking care of this issue from the investors or from the LPs point of view? First thing. The second thing is, we know that Pakistan, is a great country, is a potential country for the investment. But the issue for the investors who are sitting abroad is the exits from the investments. So from the VC's point of view, like we talked about India, or we are talking about the US. So the good thing about those countries is the VCs who are there, they are shaping the exits in a way which are giving returns back to the LPs. So in the past couple of years, I have seen only one reputable exit within the IT company of US $300 million acquisition was there.
Yep.
So how that is going to be shaped in the next coming years, because we are seeing the market is very tough.
Okay.
And the third thing is we talked about fintech, we talked about other sectors, but I didn't see any discussion about the cloud kitchens, which I believe personally that this can be a huge sector in Pakistan for investments, because if anyone is from northern areas, I'm based out of Peshawar.
Yep.
So I can see that there is no, we are a foodie nation, everyone knows.
Right.
But we don't see any big brand or any international brand based in that vicinity, which is a great area for the companies to pitch in. But we didn't see any focus from the VCs who are active in Pakistan. So how you are addressing these issues?
Okay, so first of all, that's 3 brilliant questions. So thank you, and I'm definitely going to answer them. So Aatif, you want to go first, and then
Can I go in a second?
You can go second.
Thank
you can go third. Anybody else? Okay, co-lead. You oversubscribed. Okay, very good. Well, muscling you out. Muscling you out, basically. I told you. I'm just kidding. I'm just kidding. Aatif, you want to go first?
Yeah, sure.
Yeah.
Thank you.
So let me do the exits first. Look, it's very important to put things in context. Pakistani startup ecosystem is barely 3 to 4 years. 2019 is when the real wave started. We had a couple success stories before that. So you cannot have exits that soon anyway. If you're talking about India, people were asking the same question in 2011, 2012, where are the exits? Guess what? People who invested back then, they did up very well in 5 to 10 years. And 3-4 years ago, when all of us were raising our first fund, the question used to be, where is the follow capital, right? Where will it come up from? And it did, right? So you have to take that leap of faith. And if exits are already happening, good luck, getting into early stage in India. At that point, the market gets priced out and so on. And we have had some exits. So the Cloudways you mentioned, but Daraz had an early exit. If you look at EMPG, it's actually a purely, and this is one of the other things, like Pakistan gets penalized because it's a perception issue, but it's purely a company where most of the team, the founders, all Pakistanis, start from Lahore, build a great business there, then go to UAE and set up shop there, and they're worth $1 billion, and there's been some secondaries as well. So that's a great example despite all odds. So I think like that is, in due time, it will come. Now let's come to governance. Similar thing, right? When you have only 2 companies or 3 companies that have gotten to a Series B stage, there's a sequence to these things. If you give somebody $1 million and start hovering over them and saying, look, let's do a board meeting and check in and so on, that company is not going to go anywhere. So there is around Series A, you bring in other investors, and we get international investors. You have investors like Kleiner, Process, Sequoia. These are institutional investors. They're bringing in the experience, and all of us are learning through that experience as well of how to build great boards, how to have the right governance in place, audits. So I think all of this is in place. What I would encourage is that, you hear a lot of rumors and gossip sometimes, and people tend to take that for fact, and that's not true. So it's such a small ecosystem. You can come and talk to any investor who's on the board. You can talk to the founders directly and know it, but I feel there is no specific big issue relative to governance that I'm aware of in Pakistan. It's just a matter of ecosystem maturing. Cloud kitchens, if somebody else wants to take it.
Okay, well, let's deal with cloud kitchens at the end because we've got bunch of questions. So let's go.
Hello.
So, sorry.
Just promise me second place.
That's right.
No, go ahead. It's fine. It's fine.
You'll never be second place. You're always top of the list for me. Please go. Second place. Go ahead. I promise.
No, wow, it's fine.
Absolutely.
Just kidding. I'm pulling Yousuf.
I apologize. Sorry. Please go. Seriously.
Oh, thank you.
Go ahead.
So I think on 2 of the questions all of us probably get asked the most. I think I'm audible, right?
Yeah, you're doing great.
2 of the questions we get asked the most as investors that raise money for our funds are around exits and corporate governance, right? So I think Aatif addressed the exits question. On corporate governance, I'll say that I think, adding to what he said about that time frame of when a company graduates into different levels, I think for us it's very important. We actually have a workshop coming up in 2 weeks with our portfolio companies around corporate governance. I think there's a lot of education that we can help with. understanding processes, understanding the law, and also learning from others. What's the best practice around managing a board? What's the right time to constitute a board? When should your board go from 3 people to 5 people? What's the right time to have an independent director? How frequently should you do an audit? Should you go with tier 1 or tier 2? So those are the kind of things we're helping our companies with. And I'll also say that broadly speaking, all of us are part of the Venture Capital Association of Pakistan. And one of the things that we discussed just in our call last week was that we are collectively going to do a series of workshops and toolkits. Babar is also there, helping with it, to bring more knowledge to people around in the startup space, around corporate governance, and help strengthen this, so that I think we realize it's a collective responsibility for all of us, and it's something that's going to help the whole market get better and go to the next stage. So I think that's definitely something that's top of mind for us collectively as well, and we're really focused on that. Cloud kitchens, really quickly, we'll come back to that later, but you should talk to Sameer Noorani, who's right there, raise your hand, because he's building something in that space. But I think what we found, just in one sentence, is that the economics of cloud kitchens are very different in Pakistan compared to a place like the UAE, for example. And that's one of the reasons why we've looked at a few, but we haven't decided to pull the trigger at any of them.
Yeah, so just to begin with, I'd love to talk to you about cloud kitchens. We have a little bit of experience in restaurants. Look, when it comes to corporate governance, we hold it at the highest standards, right? We won the CFA award last year for diversity, the first time in Pakistan for any financial institution to win that. 40% of our board is women. We try to encourage our portfolio companies right at the start. We don't say you have to do this, but we have a list of stuff where they can take a look at it, and we encourage them on the ESGs. They don't have to write a scorecard, but we encourage them to start taking a look at it. 70% of the companies that we invest in, we're on the board of. Again, like I said, corporate governance is a very, very big deal for us. We are stewards of other people's savings. And it's not just a case of, hey, you took some risk and you lost some money. That's not the case at all. We're managing other people's money. They've given it to us. It's our job to be good stewards of that. And, when it comes to auditors and things like that, look, the family I work with, they have 18 operating companies. We do get excellent prices on auditors, PwC, all the tier 1 companies. If there's any founder in here who wants an introduction to a tier 1 auditor for a very low fee, please let me know. I hope PwC is not listening to this.
Okay. No problem. Thanks. So I'll talk about on exits, because we all, obviously, when we're pitching and raising money for our funds, we also get asked that question, right? And similar to what Aatif said, it's an evolution process. There's lag effects. Pakistan is an opportunity today because the exits haven't happened yet. And so we're forward-looking, and VC, our job is to try to predict the future and assess that, hey, maybe what we're betting on, there'll be exits in 2026, 2030. And so, again, it's a simple evolution process. I think what you're going to see a lot more in Pakistan, at least what we speculatively think is going to happen, as the world splits into economic zones going forward. So probably from MENA or potentially from China, or Southeast Asia, you might start to see global consolidation when the next cycle begins. And that's where a lot of exits will start to happen, where e-commerce companies and fintech companies will start to have be acquired by regional players that obviously can raise much bigger rounds. And then eventually you're going to see maturity happen in the market, where there'll be IPO listings and potentially companies can even list outside of Pakistan. So it's just a process. And look, I'll leave it with this. Everything on the planet is investable. It's just in lag effects. As one market becomes saturated, then investors have to move to other markets, and initially they'll allocate a small percent of their opportunistic portfolio, and eventually they'll have dedicated funds. I think DFIs are going to invest heavily in Pakistan and fortify venture capital funds. That'll create the next wave of investments in Pakistan before international investors. And then they'll come back once the macros improve for the world and Pakistan next year onwards. So it'll be interesting.
Yeah, so if I can just add to that. So we have a fund partner, Gobi Partners. They started in '98 in China, then expanded into Southeast Asia, as well as Hong Kong. They've done about 14 funds, both early stage, late stage. So looking at the data over the last 20 years across multiple funds, what we've seen is in a fund life cycle, most of the exits, so if you have a 10-year fund, are concentrated, from year 5 to year 7, and then you have some late, investments that go beyond, year 12, and sometimes it's actually long. It's better to wait because, a lot of value creation in the portfolio happens towards the latter half. You're building early stage companies, that have a multiplier effect. So looking at that data across, 350 companies, several exits, and looking at the deployment periods also, which is the first typically 3 to 4 years of a fund. So what Aatif said earlier, we are in year 3 at best right now, from when the ecosystem really started to take off. So that.
It's already been said. I think we're just too early. Up until 2020, there were maybe a handful of companies that were even funded at the seed stage. In 2021, we had 82 rounds in total, of which I think 65 were seed rounds. Those seed companies can't exit already, right? Like, they haven't created enough value. We're in our 5th year. We're lucky to actually be going through like an exit process. In other cases, there's liquidity events that might come about. You need to get to a certain scale, right? Like, when we talk about what is an exit avenue for a Pakistani company, we are quick to say, oh, the local IPO markets are not like liquid enough, they're not deep enough. So you need to be attractive enough for an international company looking to enter the market, and as a means of that, acquire a local startup. But they're not going to start, like, most likely acquire a seed stage funded startup. You need to actually get to a sufficient scale. So first, we need to put in the money. Then we need to help them scale the business. We need to look out for governance. We need to help them get to a certain scale that the acquiring party is buying something that's there. Right? And I think we're just going to go through that evolution, and in a year or 2, you're going to start to see more exits.
Yeah. So I think a couple of key things on exits when you think about it. One is that actually the market is starting to change in terms of how they look at structuring transactions in terms of exits. And if you look at the data for the last couple of years, you'll see that actually very few companies actually go public. Like, let me just be brutally honest about that. Very, very few companies actually go public. So the activity that's happened over the last couple of years has really been driven by private equity firms. So that's actually a buoyant market. It's actually a great opportunity for private equity firms. So, and that, exits will happen over different cycles. The second thing is what you've seen as a trend has basically been where companies have looked to acquire talent because of specialty expertise in specific areas. So in Israel, it's really been about cybersecurity, where PayPal has gone through an acquisition route of multiple companies. They've pretty much shut down the product, but they've actually understood they've built out a high-quality product, a high-quality team. So I do believe that, and that's my kind of optimistic view. I think the other piece is actually, yes, I think, what Rabeel said is actually very relevant, where if you think about it, global companies right now, or companies in general, are competing by software experience. They're thinking about how they're able to broaden their customer base, number one, how they're able to basically experiment by looking at changing the customer experience rapidly. And they're going to think about relatively, very diversified avenues to be able to do that. And one is to be able to actually go to the talent and go to the products and go to the companies where they've got kind of high velocity. There's a question you asked about corporate governance, which I think is very important to put into place. We have a fiduciary duty as investors to be able to manage the money. We are fund managers. We've gone out, we've spent time, and it's a grueling process, which is why we have a lot of empathy for founders in general. I think I speak on everyone to be able to, because we have to do fundraising ourselves. And you have to hold yourself to a high standard to be able to do that. So the reality is that not every fund is structured that way, right? So it depends very much on the check sizes that you're typically doing in a particular deal. And it doesn't move the needle forward for either the company, in some cases, if it's at a pre-seed or et cetera, to have a board. In other places, to be able to, whether you are the right board member as well. The second piece of that is, as a company grows over time, boards will change, right? And the third thing is that basically we each have a role which includes both investing capital, managing capital, sitting and looking at actually looking at new companies to be able to invest in, sitting on existing boards to be able to look at governance from that standpoint. So I think it's important to be able to look at that from a vantage point. You mentioned FTX, which is an important thing. So a couple of key things to be able to talk about that. One is ultimately that was, well, there was no corporate governance, right? So that's not on anyone. It's all out in the public domain. And yes, there are mechanics, if that's a diplomatic way of putting, to be able to avoid any corporate governance. That's all coming out right now, okay? The reality is that is not a problem that should be, and I think it's important to focus on that is something that's required across companies, across geographies, across, I don't think it's specific to Pakistan. I don't think you were saying that, but I think it's important to be able to make sure we put the right context towards that. The reality is that it's not, being on the number of boards is not something that investors aim for. The reality of that is you've got to be judicious in time to be able to get stellar returns for companies. My fundamental belief is that you would be part of a board to be able to make sure that you've made a sizable investment, number one, and then actually a large part of the investment that you're making in a company requires you to do diligence, to be able to think about, and when we diligence founders, it's across multiple realms. It's not just, well, that's a great company, that's a great market. It's actually looking at much deeper levels to say, what is this person's track record before? You know, do they have good ethics? Are we going to be landing in trouble, etc.? The reality is, and I think it's fair to say that a lot of people, a lot of investors forgot that, right? There is a level of, and then sometimes that is because of pure speed or otherwise, and that's a legitimate strategy for them to deploy. But then, you know, sizable investors didn't take board seats. That's just how they want to operate. It's not right or wrong. Time will tell when that happens. So I think it's important to understand is like, ultimately, the kind of the standards that we've all adhered to, I think are relatively high. And I don't think we've, you know.
If I may add to that.
Yeah, go for it.
And again, I think like some of those successes, they're easier in mature markets like US, where there is so many startups going on and VCs are moving fast. In emerging markets, that just doesn't happen. So I mentioned there are a handful of Series B companies. All of them had boards with local investors, but also, you know, international investors. So Bazaar is an example. Dragoneer, you know, co-led their Series B, took a board seat. Process, I think, is on Bikea's board. First round took a board seat in Airlift. So, you know, I think it's evolving in the right direction, and here that's just not an option. So all of us are bringing these right partners as these companies mature, making sure we're incorporating these best practices.
Okay, one final question. Sorry, go ahead.
So maybe we can have a bit of a discussion about innovation versus Me Too, and I'll speak from the EdTech perspective because that's what I'm doing. So in India, you know, there've been over $3.5 billion of investment in EdTech now, but there hasn't been a huge amount of innovation. I mean, most of it has been business model innovation within India, but very few of those companies have gone overseas. So we, being Pakistani company, the whole sector has only raised about 15 million. So we had to look for more nuanced ways for innovation. Byju's bought White Hat, which was coding, teaching, and it just flamed out, and in fact is helping sync Byju. So we took a much more nuanced way and went into environmental literacy in California. Now we have a stake there, and we are bringing cash flow back to Pakistan. Is the VC sector in Pakistan and those who are investing or want to invest in Pakistan really interested and wants to have conversation about innovation, or more, it's more that, look, we're going to a new market, let's do a Me Too kind of thing, and let's not really have too many innovation discussions?
I think I could say on behalf of us, no. Look, I've operated in ed tech. It's actually a very difficult market to have outcomes, right? I mean, the companies that have done well, Coursera went public after 13 years, you know, Udemy, et cetera. I mean, they've been around for a long time, right? And the reality is that, I mean, I operate in a private higher education, a private education company, one of the largest in the world for 20 plus years. Both advising companies like Apple and otherwise. I mean, the only two divisions that Apple have is Apple and Apple Education, because I was started by Steve Jobs in '76. And I worked with the Apple Education team, and they themselves will tell you that. So it's not an innovation problem. It's the market that you're heading towards is not built, rightfully or wrongfully, structurally, for I'm not saying innovation, but economic output. It just that's why you've seen the growth in kind of private education, online and otherwise. You're going to start to see that. I still think it's very early innings. So I think ed tech took off a lot when the iPad came out. It was one of the largest kind of watershed movements for ed tech. The other piece of that was, but then it kind of died down. I mean, you had multiple companies, Sequoia included, which did a bunch of ed tech investments, but it's starting to come back up. But it's definitely on the long arc. So who has done an ed tech investment, Misbah?
Knowledge platform.
Knowledge platform.
Which is actually him.
Which is Mehboob. Look, so Mehboob.
So we can have this conversation in Karachi.
Okay, can this be done in Karachi? Is this like a sidebar?
Or Lahore.
Okay.
How important is innovation?
So,
And about the Series A.
yeah. No, so Mehboob, look, it's, I think, as Yousuf mentioned, I think EdTech in particular is a very difficult vertical to raise for, right? So if there's 100 investors investing in Pakistan, when you reach out for a follow-on, maybe 4 are interested in EdTech, and then chances of them are biting are fairly low, right? So I agree with you that I think innovation is what is needed. There's so many EdTechs in Pakistan. And Rabeel, I think you said India had like 5,000. Somebody was saying that there were 5,000 EdTechs in India. At the end of the day, you have to stand out and evolve your model. So when a knowledge platform at first, the model was B2C, we ran into the problem where schools didn't want to pay. They just thought, hey, we can copy this platform, right? Then we tried B2C, consumers, and this is your research, the access to meaningful screens, which you're alluding to, is an iPad, is not there for a child. A child is not going to learn on their parents' mobile phone for 5 minutes, right? So I think it's just an evolution process and timing. And I mean, you've had the staying power, and so you'll eventually, I think you'll continue to scale and innovate into monetization. And I think that's the main issue, monetization, across the board in EdTech.
Yeah.
Just wanted to, this is a good discussion around what is innovation, right? Like, how do you define it? Like, I would contend that solving for a business model that works in Pakistan, providing the same kind of service that works elsewhere, is innovating around the business model. We can call it a business model market fit. We have in the front row people who are sitting, creating organic products out of Pakistan. Hasn't been done before, something new. It's not the first time globally that organic products are being made. If you are talking about, is Pakistan in a position to have technological breakthroughs for the world coming out of it regularly in different domains? I would contend maybe we're not, because we don't have that full infrastructure around it. If you want to look at Israel and cybersecurity, then we have a different discussion. And a lot of academia has worked on it, the government support, there's been like a first loss backing of VC funds investing in that thing. Minus one of those aspects, it's very difficult to just say, hey, we are not innovating. But our population also needs those products and services. Those need to be provided by hopefully local grown startups. They need funding and they need backing, and that backing also for us needs to generate a return so that we can put it back in our next funds. So it's a good discussion, but I think it's a little bit limiting to think of innovation as, oh, it's not happening in Pakistan. I think there are different angles and different aspects that you need to innovate around, and some of that is already happening in the country.
Well, listen, let's end there. Thank you very, very much to each of you for both being pillars of the community. All right, thanks, guys.
Thank you, Yousuf.